Let's talk about what to consider with Mohamed El-Erian. He's joining us now. He is the Allianz Chief Economic Advisor, joining us from California. It is good to see you as always, Mohamed. So the economic data that we got today, fascinating stuff, as we saw that huge historic drop in the second quarter, as we see what appears to be a stalling out of the recovery reflected in those jobless claims numbers. What are your takeaways of where we've been and perhaps where we are and where we're going?
Thanks, Julian. Thank you for having me. It is the square root recovery in the sense that we came down very sharply. We saw that in today's 32.9% annualized contraction in GDP that you mentioned. We came back strongly initially. We saw that in last month's jobs report and the initial improvement in jobless claims. And now we're getting the leveling off. And that is of worry because not only do we have to deal with the damage that has been created to the economy, but also, unfortunately, we now become much more sensitive to any policy slippage. And I say this because the one thing you haven't mentioned so far on a day full of news, and it's incredible how much is going on, is that we also have the continued disagreement on Capitol Hill as to what to do next with the relief package.
And that's where I wanted to begin my questioning with you, Mohamed, because the $600 million weekly addition to unemployment benefits expires. They have no deal there. Did we learn in this brief experience that perhaps basic universal income might be something the government should be looking at, especially, as you point out, the recovery is now essentially leveling off, but not going to get much better?
So what we learned is that we don't have the automatic stabilizers that Europe has, and that our safety nets are not as good as they should be. That's what we've learned. As to universal basic income, look, we are experimenting not only with universal basic income, but we're also experimenting with elements of modern monetary theory. These are two theories that were discussed, and no one thought we would be applying them anytime soon. So I would call this an experimentation phase. The hope, and I stress it's a hope, is that we can start reopening again in a healthy manner, and that we don't need to rely on what are very blunt transfers of income.
Well, but indeed, right now it's just a hope, right? Because we are starting to see some leveling off or stabilization in cases in some hard-hit areas like Texas, but still seeing very high levels of cases and now deaths in other places. So where do we go from here if Congress cannot come to an agreement in the short term? It doesn't look like that they are getting very close at this stage.
So two issues here. One is health, the other one is economics, and they're related, of course. On the health side, it will depend on whether people modify their behavior. I live in California. We have horrible numbers. People are starting to wear masks more. Still, in where I live, less than half the population wears masks. Social distancing is not great still. So if we change behaviors, we can reopen in a more healthy fashion than we did last time. But the second issue is how willing will people be to re-engage in the economy? And that raises a fundamental point about the damage that we're doing to people's not ability, but willingness to engage. And that is something that I worry about because it has both short-term costs and long-term consequences.
Mohamed, when you look at these numbers and you look at how the different states are reacting, and you talk about hopefully not needing to use additional blunt instruments, I mean, it really does seem, though, that some kind of intervention outside of what Congress is currently doing may need to be done, though, right?
Yeah, I mean, we're running a second national experiment, and the result of the first national experiment were not great. The first one was different states opening with different adherence to guidelines, and we found out that the ones that went too fast paid the consequences in terms of pain and suffering of their citizens. The second experiment we're running right now is, depending on where you look in the country, people's behavior is different. So in New York, I'm told that people really adhere to the guidelines on social distancing and masks. And what New York is trying to do is isolate itself from what's happening elsewhere. That's why there are quarantine requirements on so many states. So we're going to run this natural experiment. Ultimately, what we need to align is individuals' assessments of risk with the risk that we all pose to society. And I hope we can do this through information, consistent messaging. But like you, I do think that we're going to have a heavy hand, unfortunately, of government to help us realign these risks. Otherwise, the longer they are misaligned, and that's particularly true among the young, the longer they're misaligned, the harder it is to reopen in a healthy fashion.
Mohamed, our Brian Chung noticed something in that second quarter GDP report, and I wonder if it's one of the structural potential changes that you're talking about that could be longer term, and that's the savings rate, which went up a lot in the second quarter. Perhaps, yes, people were spending part of those stimulus checks, but they were also saving money because it is such a concerning environment. Do you think that that is going to be a longer term change? And yes, well, I always have this sort of struggle between the big picture economy and the individual economy, because on an individual basis, it's not necessarily a bad thing to save more, but on an economic basis, it's not a great thing.
You're absolutely right. I would put two questions front and center. What you just raised, which speaks to household economic insecurity, and to what extent can you self-insure through savings, but also we're picking up indications that productivity continues to be under pressure. On the first one, let me tell you a very simple story, if I may. Among the people standing in line for the food bank here in Orange County is a former baggage handler at the airport. He never thought he would lose his job. He thought he had permanent income for as long as he could see. And that person's savings rate was very low. My projection is when that person gets his job back, his savings rate is going to go up. Why? Because he's experienced something that was a tail event. And just like people after flood insurance rush out and buy flood insurance, even though the price goes up, yes, we are going to see an increase in voluntary savings, even as jobs come back.
Mohamed, of course, we can talk about sort of the continued bleak picture when it comes to the economy. But after the big tech hearing yesterday, we did see the NASDAQ, as we were starting the show, dip back into positive territory. And it seems like despite a lot of the grilling, of course, there was some mixed analysis of the way that lawmakers handled that testimony. But overall, there were some hard questions being asked, and the likes of Bezos and Zuckerberg couldn't come up with some great answers when it came to some data privacy and antitrust concerns. What is your take here as we expect earnings after the bell today? Do you feel as though there's infinite room to run with these companies? Do you feel like they will be the ones sort of to be the Teflon stocks as we continue this recovery?
So let me just say the theme underlying the outperformance of the NASDAQ I like. The valuation I'm less excited about. So the theme is that basically companies with strong balance sheet, positive cash flow, good management, and importantly, the world coming to them, both during the living with COVID period and the aftermath, they will do well and they will continue outperforming. And you've heard me say on your show over and over again, do not fade in relative terms the tech emphasis. The overall valuation, and I have been wrong for the last 3 and a bit weeks. I exited those names 3.5 weeks in my tactical exposure. That was a wrong thing to do. But it's the overall valuation that's the real question mark for me. So I can see them continuing to outperform because they have both the resilience and agility to manage this economy. I just don't know whether the valuation still makes sense, to tell you the truth.
Mohamed, we just had Paul Romer on in the last hour, and we were talking about tech, and he suggested maybe the states should start taxing ad revenue from the 4 giant tech companies. But it raised a bigger question. And when you talk about engaging in this economy, we know every state, every city is facing massive budgetary cuts. They're going to have to raise revenue. Is now the time to be looking at tax increases, whether it's on tech and ad or somewhere else? Doesn't that usually stifle a recovery?
So in general, now is not the time to look because you would simply be dampening whatever demand we have left in this economy further. Over the long term, we're going to have to look at fiscal reforms and look at them in three ways. One, reduce anti-growth distortions. We still have too many anti-growth distortions in our tax system. Two is raise revenue more equitably. The revenue right now is not raised in an equitable fashion. And three is get greater consistency, not just across the country, but internationally. Unless we move on these three things, then we're not going to be able to have the combination of growth and fiscal stability. And it's important to have both because you need them both to able to grow sustainably in an inclusive fashion.
Mohamed, it's always great to see you. Be well, stay safe out there. Mohamed El-Erian is Allianz Chief Economic Advisor. Thanks.
Thank you.